Have you ever wondered about the differences between the stock market and cryptocurrency? Well, you're not alone. The stock market, an established financial hub with centuries of history, and cryptocurrency are two fascinating realms of finance that are shaping our world today. From Wall Street to blockchain, they each hold unique allure and potential pitfalls. Today we dive into the pros and cons of each to give you a balanced view of these two financial arenas. First, let's explore the stock market. What makes it a good choice for investors? The stock market has been a financial playground for investors for over 2 centuries. With such a long history, it's proven to be a reliable space for wealth creation. It's not a sprint, but a marathon, and a well-diversified portfolio can provide steady growth over the long term. Next, let's talk about regulatory oversight. The stock market operates under a strict regulatory framework. From the Securities and Exchange Commission in the United States to the Financial Conduct Authority in the United Kingdom, these bodies work tirelessly to ensure a fair and transparent market. This regulatory oversight adds a layer of security for investors, reducing the risk of fraudulent activities and providing recourse should things go awry. Now, what's a discussion about stocks without mentioning dividends? Dividends are a portion of a company's profits paid out to shareholders, and they're a sweet deal if you ask me. They provide a regular income stream, on top of any capital appreciation. So, even if the market is having a bad day, or week, or even year, those dividends keep rolling in, helping to cushion any blows. Finally, investing in the stock market gives you a chance to own a slice of a company, and by extension, a slice of the economy. When you buy a stock, you're buying a piece of a business. You share in the successes and yes, sometimes the failures. But there's something quite empowering about knowing you own a part of a company you believe in. So the stock market offers stability, dividends, and ownership. But what about the downsides? While the stock market has its advantages, it also has some drawbacks. And it's crucial to consider these before making any investment decision. One of the biggest disadvantages of the stock market is its susceptibility to market crashes. History has shown us that stock markets can and do crash, sometimes with devastating effects. The Great Depression of the 1930s, the Black Monday of 1987, and the more recent financial crisis of 2008 are all stark reminders of this fact. During such periods, investment values plummet, sometimes wiping out entire fortunes overnight. Next, the stock market is profoundly influenced by global events. Political changes, natural disasters, and even social trends can have a significant impact on stock prices. For instance, a sudden change in government policy can cause a company's stock price to drop. Similarly, a natural disaster affecting a company's operations can also lead to a decline in its stock value. This makes the stock market an inherently risky place to invest your money, as these events are often unpredictable and beyond an investor's control. Lastly, the stock market often requires significant capital to make substantial profits. While it's true that you can start investing in stocks with a small amount to make meaningful profits, you generally need a sizable investment. This can be a deterrent for many potential investors who may not have large sums of money at their disposal. However, it's important to note that while these are potential drawbacks, they don't necessarily make the stock market a bad place to invest. They simply mean that investing in stocks requires careful planning, a well-thought-out strategy, and most importantly, a long-term perspective. The stock market isn't without its risks. Now let's turn our attention to cryptocurrency. But before we do, here's a quick disclaimer. We're not financial advisors. The information we're providing is for educational and entertainment purposes only. Always do your own research before making any investment decisions. Cryptocurrencies, digital or virtual currencies using cryptography for security, have gained significant attention in the past decade. But why is that? Well, let's delve into the world of cryptocurrencies and explore some of the advantages they offer. One of the most alluring aspects of cryptocurrencies is the potential for high returns. The value of these digital assets can fluctuate wildly, creating opportunities for savvy investors to make substantial gains. Remember Bitcoin's meteoric rise? It's a prime example of how investing in the right cryptocurrency at the right time can pay off handsomely. Next, we have the ease of access. Unlike traditional banking systems that operate within business hours and geographic boundaries, cryptocurrencies are accessible around the clock, from anywhere in the world, as long as you have an internet connection. This universal accessibility can be particularly attractive to people living in areas with limited banking facilities. Furthermore, cryptocurrencies are independent of traditional banking systems. They operate on decentralized networks based on blockchain technology, a distributed ledger enforced by a disparate network of computers. This decentralization gives users more control over their finances, eliminating the need for intermediaries like banks or governments. Another advantage is the potential for anonymity. While the level of anonymity varies depending on the type of cryptocurrency, transactions can be made with a certain degree of privacy. This can offer a layer of protection against identity theft, a concern that's becoming increasingly prevalent in our digital age. Lastly, let's not forget about the potential for innovation. Cryptocurrencies and the technology underlying them, blockchain, can pave the way for groundbreaking developments in various sectors from finance to healthcare, supply chain management, and beyond. Cryptocurrencies can offer high returns and independence from traditional systems. However, they also come with their own set of risks. Remember, it's important to do your own research and make informed decisions. After all, we're here to inform, not to advise. Cryptocurrencies are known for their volatility, but what other risks should you be aware of? Now let's delve into some of the potential pitfalls that come with venturing into the crypto world. Arguably, the most well-known characteristic of cryptocurrencies is their volatility. The value of these digital currencies can fluctuate wildly in a very short time, making it possible for investors to experience significant gains, but also substantial losses. This volatility can be attributed to the speculative nature of cryptocurrencies, with their value largely depending on market sentiment rather than tangible assets or earnings. Another major concern is the lack of regulatory oversight. While the decentralized nature of cryptocurrencies is often touted as a benefit, it also means that there's no central authority to turn to if things go wrong. This lack of regulation can make the crypto market a playground for scammers, with fraud and market manipulation being all too common. Cryptocurrencies are also susceptible to cyber attacks. Despite the advanced encryption techniques used in blockchain technology, hackers have been able to exploit vulnerabilities and steal millions of dollars worth of crypto from individuals and exchanges. And remember, transactions made with cryptocurrencies are irreversible, so once your crypto is gone, it's gone for good. And lastly, there's the potential for loss if private keys are lost. A private key is like a digital password that gives you access to your cryptocurrency. If you lose this key, you lose access to your crypto. And unlike forgetting a password to your email or social media account, there's no "forgot my password" option in the crypto world. Losing your private key means losing your crypto forever. So while cryptocurrencies offer potential for high returns, they come with significant risks. It's essential to understand these risks before you decide to step into the crypto market. Remember, we are not financial advisors, and you should always do your own research before making any investment decisions. Both the stock market and cryptocurrencies have their pros and cons. Your choice between the two will depend on your risk tolerance, investment goals, and understanding of each market. To recap, the stock market, with its long-standing history, offers a sense of reliability and is governed by clear regulations. However, it can be influenced by global events and may offer slower returns. On the other hand, cryptocurrencies, the new kids on the block, offer potentially high returns and decentralization, providing freedom from traditional financial institutions. But remember, with high reward comes high risk. Cryptocurrencies are volatile and less regulated, which can lead to potential losses. Whether you choose to invest in the stock market or cryptocurrencies, it's important to stay informed, understand your financial goals, and assess your risk tolerance. Remember, we are not financial advisors, and you should do your own research. Thanks for watching. Be sure to like, comment, and subscribe. And hit the bell notifications so you'll get updates anytime we upload a new video.